Hello everyone. Today let's talk about a faraway market, China. So it is no secret that the environment is favorable for credit markets, return of the optimism on growth and vaccination campaigns, and still we have very accommodative global monetary conditions. Chinese credit markets have the best year-to-date performance, but in June they're facing headwinds and are in the back of the pack. Systemic conditions have not changed, so what is affecting Chinese credit? Well, it's domestic concerns that are crystallizing on some issuers, and especially on the Chinese property developer Evergrande. It's not the first time that Evergrande is in the headlines. In October last year, it already went through difficulties, but they managed to turn things around. 8 months later, it's back in turmoil. The share price has halved, and despite massive purchases by Mr. Wei, the group's chairman, and his wife, so massive that the couple now owns 77% of the shares, and the free float is approaching the limits for a listing in Hong Kong. The bond market is also showing concerns as Evergrande's credit curve has inverted. You get a yield of 25% for a bond maturing in less than 1 year, but only 19% for a 2025 maturity. Missed payment from an affiliate of the group, an investigation of the Chinese regulator into Evergrande's links to an obscure bank in the north of the country, and also the Chinese authority have asked major creditors to conduct stress tests on their exposure to Evergrande. Knowing that 81% of Evergrande's debt maturing in 2021 is bank loans, the request is more than understandable. So the risk could be transmitted through the whole system, not only through the banks, but also through the real estate market, a backbone of the Chinese economy. Until now, defaults in China have mainly affected the domestic market and were considered like an epiphenomena. With Evergrande, a systemic issuer for China, and with lenders all around the world, the story becomes more worrying. So much that the Chinese high-yield debt as a whole is suffering, reflecting investors' fears. Mr. Wei still has got some options in his corporate portfolio. However, the situation is getting tricky, and recent experience shows that the too big to fail in China may have reached its limit with the restructuring of the former Chinese flagship conglomerate HNA. The 100-year anniversary of the Chinese Communist Party on the 1st of July could provide a last breath of fresh air for the company. That being said, the spread to the entire market continues, illustrating that the domino theory is not confined to the political sphere. Thank you.